Hey Jason,
Hey Daniel,
how are you?
I'm doing great. How are you?
I am doing fantastic. So we want to talk to you today about the importance of pricing your home when you list it to sell. But first,
We've got Sal Avalos with Americana Home Loans to talk about adjustable rate mortgages.
yeah, I think they're a hot topic today, so I think everyone's
Absolutely.
really going to want to hear what he has to say.
Totally.
Let's bring in Sal.
Well, ARM loans are adjustable rate mortgages. And essentially what they are is a type of rate that you're getting on your mortgage. Now, it could be from a 7-year fix, 5-year fix, 3-year fix, and eventually after that first term expires, then it will start adjusting. At what rate it adjusts to depends on the market at the time. It could be every year thereafter or every 6 months thereafter. And essentially, somebody gets into it very strategically, understanding those terms and moving forward that way.
Sal, I hear there's a stigma about ARM loans. Can you explain a little bit why?
Yes, there is some sort of stigma around them, and that's for the mortgage meltdown that happened in around 2007, 2008. Now, one of the things that happened was a lot of people weren't informed of the type of rate that they had. They didn't know they had ARM loans. And let's say if they had a 3-year adjustable, then after that 3-year period, it adjusted to a higher point, and for that period, it was a much higher point. So an individual could have been paying a very low payment, let's say $2,100 or $1,500 with a low rate. Once that rate adjusted, if it doubled, their hands are tied and they weren't able to make a payment. And a lot of the clients that I have today, a lot of them, when I'm talking to them about the interest rate, the first thing that they bring up is this a fixed rate? And now that tells me that there's an underlying, fear that they're gonna get an adjustable rate. But they're not around that much anymore because the 30-year fixed rate was so low, it wasn't a good option to try an adjustable ARM. So that's why they have that negative stigma because of 2008 meltdown.
How do we change this negative outlook on ARM loans?
Well, first and foremost, we want to make sure everybody understands what they're getting themselves into. When I meet with the client, I try to emphasize that I'm here to give them their options, make sure that they understand the pros and the cons of what they're getting themselves into. One of the things that we talk about when we go into the specifics about an ARM loan, not just the upfront fixed period, which is 7 years, 5 years, 3 years, but we want to also focus on what can happen once it adjusts. Maybe if they have the type of loan that can adjust every year, we want to kind of just paint a scenario for them of what the worst case scenario is. But also educating them on having an exit plan. So I'm going to give you an example. These loans, these type of rates are good for people that know that they're going to make a move within a certain time frame. Or maybe they're just living in an area because work took them there. And they know that work is only going to keep them there for the next 4 years. A 5-year ARM would be ideal for them, because at that point they get a lower rate than what a 30-year fix is. And also, if they're going to sell the house within a 5-year period, let's say in that case 4, then they don't have to worry about when it adjusts.
How can ARMs help home buyers today?
Well, first and foremost is getting them a lower interest rate. Today's rates are around 5.5, high 5s, and adjustable could be in the 4s or high 3s. Now that could be a great option for them because it's a much lower payment. And the savings occurred within every month adds up really fast. So that's a really positive thing. Another thing that it can help them out, because of that lower payment, it can increase somebody's purchasing power. Now, it's a different case scenario for every profile that we see. So when we sit down with somebody, we want to make sure we understand what we could do, how to compare it versus a regular fix to the ARMs. Again, it could be a 7, a 5, and a 1. And we want to take a look at which is more beneficial for their short-term goals and long-term goals.
Hey Jason.
Hey Daniel.
So we want to talk about the importance of pricing your home right so you get maximum dollar when you sell your home. So Jason, what do you think is one of the most important things to sell your home for top dollar?
So to sell your home for top dollar, what you want to do is you want to get the highest amount of qualified buyers to see your home.
Exactly. So to get that, the most important thing is to make sure your home is priced right when it hits the market. So in order to do that, what are some things we could do for our clients here, Jason?
Well, what we can do is we will compare your home to the number of active listings, the recently closed listings, and the ones that are currently under contract.
Yeah, and as your local real estate professionals, we know this neighborhood, so we can make sure we bring out the most important things and we make sure that all the important facts are listed for you when we decide to price your home.
So shoot us a DM or give us a call or a text and we can give you an awesome comparable market analysis on your property.
Yeah, and we hope to talk to you soon.